Hello, my name is Angela Owens with Phenomenal Business Solutions, and I help small businesses streamline their finances, increase their profits, and grow their business. Today, I want to share with you about how to turn your generosity into tax wins. So, charitable giving matters because it reduces your taxable income, it helps causes that you care about, and it could be a year-end tax strategy for you. So the best way to make the most out of your charitable giving is to give smarter, not just more, and understand what the IRS allows and boost your deductions without increasing your donation. So, are you able to claim charitable deductions? Well, if you itemize your deductions on Schedule A, then you can claim your charitable deductions. And your donations must go to a qualified 501c3 or similar organization. And this can include churches, schools, nonprofits, disaster relief organizations, and things like that. It cannot include GoFundMe, political organizations, or private gifts. So if you decide to go out and purchase food for the homeless, and it's not an organization, you cannot deduct that. If you wanted to help a student pay for something at school, that's not considered a charitable donation. So it definitely has to go to an organization in order for you to be able to deduct that. So with the standard deduction and itemizing, like I mentioned before, the way that you can take advantage of charitable donations is only if you are itemizing your deductions. So most people take the standard deduction because it's pretty high now. Like for single people, it's like $15,000. So unless you gave more than $15,000 and have a lot of real estate taxes, it may not benefit you to itemize your deductions. Also, the charitable donations only reduce taxes if you itemize. And consider bunching donations every other year to itemize. For example, if you know that you're not going to be able to give more than, I'm just going to use the single $15,000, but you know that over time, you really could give that much in one year in some type of way. So you can hold that money or donations or products or whatever that you want to donate and bunch them up in the same year so that you can maximize that deduction. So this is what you can donate and deduct. You can donate cash donations, whether it's cash, check, credit card, debit card. You can donate non-cash donations such as clothing, furniture, vehicles. You can also donate appreciated assets like stocks, crypto, property, and also business inventory, but you got to do it properly through the business. And here's how you can give smarter. Consider donor advised funds for strategic giving. You can donate appreciated assets, and when you do that, you can skip the capital gains because you're donating it. And you can also track your donations in real time, not just at tax time. And keep a folder for your receipts and records. That way, if the IRS ever comes asking for the validity of your donations, you can definitely prove it. So what are appreciated assets that you could donate? So you could donate like your house, you could donate stocks, cryptocurrency, different things like that. And when you do that, you can deduct the fair market value and avoid capital gains tax on the appreciation. And like I said, great for stocks, crypto, real estate, and mutual funds. And donor advised funds, I mentioned that you could donate that as well. So you donate now and get the deduction now, and the money sits and waits until you are ready to give it to a particular organization. And this is great for long-term charitable planning. Like, for example, you have a lot of money, you want to give some money, but you need some time to figure out where you want to give that money to. So this is a great option for that so that you can take advantage of donations each year and give it to later when you find a worthy cause. But once you give it, you can't get it back. So once you put that money up, you cannot bring it back because you definitely took the deduction for that. So here's a bonus for business owners. So for sole proprietors, technically you're not supposed to deduct charitable donations because it's personal income basically. But if you are donating to charity to get your name out, and so that it gives you advertising opportunities, it could possibly be a marketing expense for you instead of charity. And that will help you bring down your taxable income as well. So, donating used clothing. This is one that a lot of people tend to confuse. So, you can give clothes, but a lot of people value their clothing more than what they are really valued. So you could only get the fair market value. Just imagine you go to the thrift store. What could you purchase that pair of pants for at the thrift store? You may have paid $200 for those pants, but at the thrift store, somebody can get that same pair of pants for $20. So you have to be very realistic about the items that you are donating as well. It's not going to be what you paid for. Even if you have a piece of furniture that you never use, you kept it in a storage, and now you want to donate it, and you paid thousands of dollars for it. Well, you still can't deduct thousands of dollars because the fair market value is lower. So make sure that you um, truly understand the value of what you are donating and keep a detailed receipt. So when you donate to an organization, if they can evaluate and give you how much it's worth, that's even better if you can have that on your receipt. And also your donations must go to a qualified 501c3 charity. So IRS rules you may not know about. If you donate over $250, you require a written acknowledgement. Non-cash items over $500 need a Form 8283. That's an official form to show that you actually know how much your products are, your items that you donated, so that you can get credit for that. And you definitely want to have supporting documentation so that if they ever come looking for you, you have the information to prove that you can deduct that amount. Also, for property over $5,000, an appraisal is required. So, like I said, if you have furniture that you spent $10,000 for and you want to get about $5,000, $6,000 for it, you have to get an appraisal and do that. So, what about this? Okay, yeah. So here are common giving mistakes that could cost you. Donating to unqualified organizations, forgetting to get written proof, even for recurring gifts, overstating fair market value of used items. That's why I wanted to really go over the clothing thing, because that's really where a lot of people get caught up, is overstating the fair market value of clothing items. Also, not itemizing when you're eligible to, and claiming cash without a traceable record. Oh, I also wanted to mention, if you do things for your church, you can deduct the mileage to go back and forth with helping with that as well, because that is a nonprofit organization. Just add that little tip there. So, what is changing for charitable deductions in 2026? So, if you don't itemize your taxes, it's possible that you can give up to $1,000 if you're single, and you can claim that, and that will lower your taxable income. If you're married, $2,000. And itemizers must surpass a 0.5 AGI floor before their deductions count. So your deductions have to be more than 0.5% of your adjusted gross income. And high income taxpayers have a 35% tax cap on itemized deductions. So even if they give millions to charity, they can only take 35% of that as a charitable deduction. So I hope that today's information was beneficial for you. And if you want to see if itemizing is a good tax strategy for you, you can definitely book your appointment with me at pbsllc.pro/calendar page. If you haven't already downloaded my Ultimate Tax Organizer, you can go to pbsllc.pro/tax organizer, and you can organize your information and have it nice and clean so that when you are ready to get your taxes done, everything is put together. And be sure to follow my social media, Facebook, Instagram, and YouTube, and I will be giving tips and how you can save on your taxes and different strategies. So I hope you have a wonderful Tuesday. See you next week. Bye.